should also be gobbling up these mining stocks. Again, that's where most of my personal money is. Half my personal portfolio is in gold and silver mining stocks. I expect those stocks to just explode. I think the upside potential is enormous. Not just 5 or 10 baggers, but bigger than that. Of course, there's risk, right? I mean, I've thought this for a while. This setup is perfect. The fundamentals are perfect. Nobody is playing this trade. The hedge funds aren't there. Institutions, retail, nobody talks about it, even though it should be, right? Even though gold's at 2430-ish. It's right near a record high. It's barely below its record high. It's a contrarian investment to be bullish. That's how bearish everybody is. It's the best opportunity I've seen.
In a surprising turn of events, renowned financial expert Peter Schiff is advising investors to closely monitor the gold and silver markets as Japan's latest monetary policy shift sends shockwaves through global economies. Schiff, who has a significant portion of his personal portfolio in gold and silver mining stocks, believes the current market setup is nearly perfect for these investments to see extraordinary returns. Schiff notes that Japan's decision to effectively halt its rate hikes has created a highly bullish environment for gold. Despite gold's recent lackluster performance, reaching only a 10-day high, Schiff argues that the stage is set for a major breakout. He highlights that gold prices, which are hovering near record highs, could soon explode as inflation escalates and the global economy officially enters a recession. Adding to the intrigue, Schiff anticipates that the Federal Reserve will soon pivot from its tightening stance, with a 50 basis point rate cut likely in September, followed by a series of smaller cuts. But that's not all. Schiff warns that quantitative easing is on the horizon, a move that would undoubtedly drive investors towards gold as a safe haven. As the US dollar shows signs of weakening, Schiff predicts that gold could soon surpass the $2,500 per ounce mark, potentially never looking back. This could be the moment investors have been waiting for.
Trump and Harris they're both saying, we're not going to touch Social Security. No one's going to cut Social Security. No one's going to cut anything. Nobody wants to talk about cutting any government spending. Well, the reason we didn't have to cut it in the past was because the Fed had it covered with low interest rates, so we can keep on borrowing. And so there was no reason to cut. Remember what Janet Yellen was saying, even as Secretary of the Treasury? Why should we worry about the debt? Interest rates are so low, right? Just keep on borrowing, right? Well, they weren't going to stay low. I don't know why she didn't get that. I did. I criticized her for those comments. But the world did that. Rates were cheap, so we borrowed. And let's not even concern ourselves with what might happen eventually when rates go up and we have to repay what we borrowed or we have to cut back on the spending. What we ended up getting was Japan riding to the rescue and saving the day. Now, the fact that gold didn't just take off, it's just amazing. This was such a bullish announcement that the Bank of Japan has already surrendered on its rate hikes and it's barely above zero. The Fed is also surrendering. They're going to start cutting. But inflation is going to take off just as the economy is officially entering recession, even though we've unofficially been in it for some time. You can't imagine a more bullish environment for gold, for the mining stocks. Gold was down last week. In the face of this, mining stocks were down. So this is just a great opportunity. The dollar ended the week flat. It closed last week on a 4-month low. So the dollar didn't really bounce from there, but it is getting ready to roll over when the Fed, starts to cut, even before it cuts. And it's not just going to cut. It's going back to QE. Nobody is talking about that, but that is what's going to happen because rate cuts aren't going to do it. They're not going to be enough, right? Quantitative easing is going to be required and an even larger dose than before. So the balance sheet is about to go ballistic. So gold should be rising. And so this is an opportunity not just to buy the metals, to buy the physical gold and silver, which you should be buying, but you should also be gobbling up these mining stocks. Again, that's where most of my personal money is. Half my personal portfolio is in gold and silver mining stocks. I expect those stocks to just explode. I think the upside potential is enormous, not just 5 or 10 baggers, but bigger than that. Of course, there's risk, right? I mean, I've thought this for a while, but The setup is perfect. The fundamentals are perfect. And nobody playing this trade. The hedge funds aren't there. Institutions, retail, nobody talks about it, even though it should be, right? Even though gold's at 2430-ish. It's right near a record high. It's barely below its record high. Yet it's a contrarian investment to be bullish. That's how bearish everybody is. So it's just, to me, it's the best opportunity I've seen. So you should be buying these stocks. The Euro Pacific Gold Fund, you could buy it no load at Fidelity, Schwab, any of the big discount brokerage firms, or go to Europac.com and talk to my representatives about how to get into our fund, how to get into our separately managed accounts where we manage a portfolio. And also the shift, my value fund now it's in the top, I think it's in the top 10%, I forget, maybe 6% year to date. But a month ago, it was near the bottom of the pack year to date. Now it's almost at the top as we're shifting into value out of all the momentum stocks that I don't own. So the strategies are really coming into play. But what's going to kick them into a higher gear is going to be the weakness in the dollar. Once the dollar really rolls over, it's a whole new ball game when it comes to international investing. And the dollar decline is way overdue, just like the gold breakout. And even though gold has moved up, right, we have hit new record highs, nobody's cared. Nobody's paid attention. And most of these gold stocks, now some of the gold stocks hit 52-week highs last week and then got slammed on that big drop on Monday. But again, I think that was just frustration because they couldn't push gold above 2,500. Well, once it gets above 2,500, it may never look back to 2,500, right? Because they just made
a prime opportunity to not only buy physical gold and silver, but to dive into mining stocks that Schiff describes as significantly undervalued. The global debt situation, particularly in Japan, the US, and Europe, looms large as central banks struggle to normalize rates without triggering market instability. Schiff points out that the artificially low interest rates of the past have created unsustainable debt bubbles that are now impossible to deflate without severe economic consequences.
Talking my last podcast, and even on my Spaces, my X Spaces conversation, about the potential of the Federal Reserve, saving the market. Well, I should have been talking about the Bank of Japan saving the market, because that's what happened. The main reason that we had this big recovery during the week was the Bank of Japan. Now, the Japanese stocks on their own recovered on Tuesday. So Tuesday was an up day in Japan. And part of that might have been the way we turned around on Monday. When Japan opened, the U.S. stock market was a lot higher than it was trading at when Japan closed. So I think the fact that, we didn't collapse and our interest rates, we had a big drop in rates as the market started to price in this 100% probability of a September cut. And by the way, they priced in a lot more cuts, between now and the end of the year. So everybody is thinking the Fed has got to rapidly kind of catch up with a bunch of cuts. And so Japan rallied. But then what happened the very next night, because Japan probably would have rolled over. That was probably like a dead cat bounce. We had a big drop Monday, Tuesday, Friday and Monday. You get a reversal Tuesday. You get a turnaround Tuesday. Normally a meaningless type rally. And the Nikkei probably would have resumed its descent and maybe made new lows, which would have, impacted our markets, but for the Bank of Japan, which came to the rescue. Now, they didn't have an emergency rate cut, but they had an emergency announcement that they're going to stop hiking. They just started hiking. They're at 25 basis points, right? They're barely above zero after having been there for 2 decades. They were negative for I don't know how many years. And so they came out with an announcement. They said that there will be no more rate hikes while the markets are unstable. And the markets immediately rallied because it's impossible for the Bank of Japan to normalize interest rates and the markets remain stable. They're going to be unstable. So what the Bank of Japan is saying is, will only raise interest rates if it doesn't destabilize the market. Well, that means they're not going to raise interest rates, because the only way you could raise interest rates is if you destabilize the market. Again, that was the deal they made with the devil going in. They kept interest rates so low for so long that they inflated a massive debt bubble. Well, when you eventually have to normalize rates, you can't do it without pricking that bubble. Well, the markets aren't going to be stable when the air's coming out of a bubble. The markets have to collapse. The economy has to collapse. Everything that was propped up by artificially low interest rates collapses when artificially low interest rates go back up. It's going to happen in Japan, happen in Europe, happen in the United States. All these central banks did the same thing. And they're all in the same no-win predicament. And what happened in Japan is going to happen here. In fact, it already is happening. I mean, that's why Powell stopped hiking. But that's why they're going to cut. They're going to go back to quantitative easing, because you can't normalize rates anywhere, whether it's Japan or the United States, without destabilizing markets, without huge declines in asset prices, without a massive recession. It's not just a soft landing. That's impossible, right? It has to be a crash. And governments are going to have to deal with the consequences of being forced to slash government spending, because
For those with an eye on the future, Schiff's message is clear. The current environment could present substantial opportunities in the mining sector. As the Federal Reserve edges closer to rate cuts and a return to quantitative easing, savvy investors may find that now is the perfect time to position themselves for what could be a historic surge in gold and silver prices.
Finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.